Hey, thanks for making it to Veterans Info Tap. I'm glad you made it. As you can see, I have a guest here, special guest, David Piatek. Glad you made it. David is the forefront, really, in VA mortgage education. He has a YouTube channel, VA Housing Education. Please check it out and support him. He is a veteran, still currently serving in the reserves, and is an outstanding individual who really kind of meets the whole thing that I always say, which is if we don't take care of each other, something went wrong. He is absolutely on that same wavelength, and that's why we're here today. And, David, I want you to introduce yourself, give the folks a little bit of the background of you, what you're about, and then, let's pick a topic to talk about today, specifically for our military members out there, our reservists, our veterans, all that good stuff. So everybody out there, please hit the thumbs up, subscribe, share with a friend. We really appreciate it. Help get this information out because, quite frankly, this is a world of I wish I would have knowns, and David is here to help kind of get rid of some of those I wish I would have knowns. David, take it away.
Awesome. Jason, thank you so much for the introduction. So again, David Piatek. I'm a director of government lending at Waterman Bank. Been in the mortgage business for about 18 years. I've been serving in the military for the last 15. And the reason why I got into helping the military community specifically around housing is because of how many people I saw around me struggling to use their VA home loan, or they got information that was inaccurate. And then, I go online and I also search for like different topics, right? Because I do a lot of videos around how to leverage the VA loan. And I'm like, holy cow, this information is inaccurate. So that's, one of the topics I want to really cover today is that about 30 to 40% of veterans that are out there that are actually qualified, disqualified themselves from actually using the benefit. And then you also have external factors that where people will tell veterans, hey, don't use the VA loan because another product is easier. And I think it's unfortunate because it is a powerful benefit to use. You've earned that benefit. But if you don't know how to navigate that piece, you really are going to be lost in the sauce, or you're going to be basically at the mercy of someone else. So my philosophy is you have to educate yourself to a certain degree, both for yourself, plus like being a military member, you need to help your other battle buddies out, right? When they're going through this process, and they tell you something, you should have like those spidey senses. Like, wait a second, something doesn't seem right. Why don't you reach out to somebody that can at least give you an evaluation? And, Jason, I know we've done some live events before, and we've had a lot of great people reach out that just have questions, right? Around what can they do? What are my left and right limits in that home? Or if they're in that process, they're like, hey, can you just walk me through this piece because my lender isn't explaining it to me, and I'm at the end of my process, right? So we don't sit there and go, work with us. It's, hey, let's walk you through it so you can wrap up what you're doing and get you to a good place. So
Absolutely.
taking care of each other is the key here.
David, you bring up a good point, and it's a lot like veterans benefits for disability compensation. Many of us sit there and go, well, it's not for me, or I don't really have anything. This, it probably would have happened to me anyway. And so we self-segregate out of even going through the process, or even worse, we self-segregate out of it so much that we don't even have the conversation with somebody out there that can help you. And that is a very important point. Do not self-deny, do not self-segregate out of these things. Have a conversation with, like David, who can guide you in the right way. And look, what's the worst case scenario? Really, you don't qualify today, but guess what? Here's the 2 or 3 things that you need to work on in order to be able to get approved. Same thing with mortgage, with VA benefits, right? Go sit down with an accredited rep who can sit there and go, hey, you don't have all of the documentation you need for this specific condition. Get these 2 or 3 more things, and then bring that, and then we'll get that filed and get you going. The other thing, David, that you said was misinformation out there regarding the benefit, and also lenders. This drives me nuts because, as you know, David, I was in lending too, and I did it for about 12 years, right? So you got me on the years there, and I did it way back when. But I cannot stand the answer from a lender of, well, let's go this route because this is going to be better for you, when I know in my mind they're picking that not because it's a better program, it's because that's a program that lender knows how to do. And
Right.
oftentimes, not every time, but oftentimes, Dave, you know, like I do, oftentimes the person would have been better off in a VA loan, but the lender steered them into another product because, one, they could make more money, or
Totally.
two, it was an easier route for them. And that's just a horrible situation. So
And
my
let
question
me
to you, David, my question to you is, what sort of things can people look out for? What sort of things do we see people self-denying or self-segregating out for?
Yeah, well, let me touch base on what you mentioned. So, and I did a whole video on this, is the cost of not using your VA home loan the first time around. And I'll explain what that means. Is that I get a lot of people that call again from these videos, and they'll be like, "Hey, I was told to use a conventional or an FHA loan, and then later I can refinance into a VA loan." Well, guess what? It's one, not that simple. Two, you have to go through the entire process again of getting an appraisal. And if you really don't have 80% loan to value, then you are going to get hit with higher rates normally. Okay. So just kind of across the board for educational purposes, like that's normally where it runs 80% or low. And guess what? If you don't have a service connected disability of 10% or more, you pay a VA funding fee. And on a cash out, it's 3.3% of a purchase price that gets added back to the mortgage. So on average, right, because the average price point across the US is about 400,000, it costs you a minimum of $20,200 more if you don't use the VA loan, right? So that's off the bat.
Well,
And so with that, like people will then say, well, this is the reason why I'm not using my VA loan, but I'm using an FHA loan, which is pretty ironic because the VA loan does have looser credit requirements than an FHA loan. So those are things to keep in mind. So one thing that people will say is that I have a too low of a credit score. Now, the one thing to note is that the VA does not have a minimum credit score. And by the way, because I just did a bunch of videos with the VA, like the VA also doesn't set interest rates, right? Lenders do. And we're going to cover that here in a little bit on why it is a better product than VA loans, which you need to be careful of. So the VA technically no minimum credit score, but lenders do have overlays to what that credit score is. Now, to make things, I guess, a little bit more complicated is the type of approvals that exist, right? There's automated approvals where you just put a bunch of stuff in a computer and then it generates an answer that says, voila, you qualify, all good to go. And another one is you put all the information in the system, but it may not be able to recognize, let's say, that you had a bankruptcy, 2 years ago, but it's thinking it's less than that and it downgrades it to what's called a manual underwrite. Okay. That's when a lender has to underwriter manually reviews that file, and they will then have tighter restrictions than if you got an automated approval. Okay, I know that's a bit technical. I have a whole video on that if you want to check it out on the channel. So the thing is that as long as your credit profile can show that you are able to make payments on time, then your chances of getting an approval are much higher. And then again, technically, there's no minimum credit score that lenders should be working with, but they do have their own overlays, which you can ask the lender, like, what is your minimum requirements?
absolutely. And another thing, David, that I wanted to throw out to you was, when people are looking at VA loans initially, and then the lender guides them into something else with the idea that they could refinance later, I wanted to ask you a question on that. Can a veteran who oftentimes, if you're even remotely engaged with real estate and mortgages and anything like that, maybe you're looking at stuff, you may have heard of the interest rate reduction loan, right?
Refinance. Yep, the
Yeah, there you
Earl.
go. Refinance loan. Yeah, okay. That's that extra R. So the Earl, right? So that loan, you might hear about that and you might hear great things. And there are great things about it. I love that loan. But what's not explained is, and this is the question, let's say that a lender drives me into a different product, right? So now I'm in an FHA or even a conventional loan for whatever, right? So now I'm in this other type of loan. Can I refinance a non-VA loan into an Earl?
That's a good question because I do get that. Ironically, so this is what happens: is that you have to use the VA loan the first, not the first time. You have to have a VA loan in order to do an IRL. Otherwise, it's considered a cash out refinance, even though you're not doing a cash out refinance. That's why there's all these additional restrictions that come with it. Okay. Um, there are scenarios where a conventional loan might be better and because of the property condition itself. Well, we're just straight up like this just isn't going to make sense. The V is going to come back with too many items, but you can do a VA renovation loan. So those exist, right? So
Yep.
again, that's why you want to be able to look at all those options and see what makes sense. Because if you do the renovation loan, yes, the cost may be a little bit higher. The rates are typically higher on those, but then you have the option of doing an interest rate reduction, which again is going to have overall lower fees and a much easier process because on an IRL, Jason, all you need is a source of income. So even if you had $1 million house and you had a 10% disability rating, guess what? You can still do the refinance and still save money. So that's kind of why the program is really cool to use it the first time around.
Yeah. And that's exactly what I thought you were going to say, David.
Yeah.
So here's the thing is that utilizing the VA loan initially is a huge benefit with cascading benefits off of that, hence the IRL. With interest rates trending in all different ways,
Yep.
it's nice to have that option when it does come to fruition that you could just do a quick refinance with a source of income. That is huge to me in today's kind of ever-changing marketplace, right? So
Yep.
I think that that's great. What are some of the reasons, some of the other reasons that you see people self-segregating out of doing a VA? Now, and here's the thing. This could be for the folks out there, you could be thinking about refinancing, you could be thinking about purchasing. Okay.
Yep.
You could be thinking about these different things and self-segregating out, self-denying, going, well, I can't because of X. So whether it's a purchase or a refinance, people fall into these buckets. So give me a few more reasons why, or that you've even seen that people self-segregating out.
The one of them that surprises me the most, and we're going to do a whole separate video on this, is that veterans that receive VA disability will be like, well, I don't have a job, so I can't get a VA loan. I'll pause there because you can 100% use your VA disability income the second that you get that benefits letter, right? And make sure you check the mobile app because you'll get it faster than looking online. And then you'll be able to then say, hey, lender, I have my disability. Even if you're in the middle of buying a house, right? You may be charged a VA funding fee, guess your rating. You can use that money right away. So that's surprisingly to me one of the biggest ones that people will be like, well, I just don't qualify to be able to do this. And coupled with that will be just employment, because most people think that you need a 2-year job history in order to use the VA loan. Okay. There's so many caveats to that. Like if you were in school prior to going to your job, that school counts as a work history. Okay. And then you're able to then use it as long as you get a full-time work. Part-time work, 2 years. Self-employment, you really need 2 years. And self-employment's like 1099. You got an S corp, or more than 25% of your, or 25% or more of your income is from commission. You're considered self-employed. So kind of just be aware of that piece there. But that even like another one would be is like you weren't working for 1.5 years, but then you went to work for a utility company. You took a bunch of trainings, got certified, and then you started the job. Well, guess what? That would put you back on using the VA home loan. So which is pretty cool.
That's very cool. I have a question for you on, you mentioned if VA money is your only source of income, right?
Mm-hmm.
Now, you mentioned it earlier that even if you have any amount of income, source of income for the IRL, for the refinance,
Right.
that is fantastic. The other thing is, when we look at VA disability compensation at any level, right? All these tax-free funds
Right.
that we're receiving, we might not think that we have enough. Now, you already explained on the EARL, the refinance, that's not really taken into account.
Yep.
But let's say for a purchase or a cash out refinance or something like that, where the dollar figures do make sense or do have to be looked at. How do you look at non-taxed income? It's not showing up on a W-2. I don't have it on my tax returns. How do I show you that I have this money, and how do you calculate that dollar figure?
Gotcha. So a couple of ways. So VA disability compensation is going to be on a certificate of eligibility. And number one, a lender should not be asking you for your certificate of eligibility. That is a red flag. Okay. Like when you work with us,
Mm.
we request it so then we see your disability income. Now, one thing to note with that, if you recently got your disability rating, your certificate of eligibility is not going to be updated. We'll help you update that with the VA so then everything's going to be correct for your benefits. Okay, so that's one. If you receive like Social Security or SSDI, then you're going to submit an award letter because, again, that is not on your taxes. And then also technically, if you receive rental income on a purchase of a multifamily, then they don't actually take taxes out. You get all of that money. But that's like, again, maybe like a whole hour conversation around that. So with this income, if it's not taxable, a lender actually grosses up that income by 125%. Now, VA loans primarily will look at what's called residual income. That's like your true net income. Okay. So then gross up goes out of your residual income, but it still helps you with DTI purposes. The only time we really see debt to income restrictions on veterans buying is if you're on active duty, and that does not include National Guard or Reserve members. This is just straight up you're on active duty. Then you will typically see a max debt to income ratio just because of how they want it structured. Or if you do a manual underwrite, lenders will have a restriction typically. I know that
Got
was
it.
a lot for one question,
Yeah.
but
Yeah. No, that's great information because it's important to understand that essentially what you're saying is that 125%, $1,000 becomes 1,250 and so forth. And so the more
yep,
money you have, the easier it is, I think, for underwriters to help push your loan along, we'll say,
yeah,
right? Even if
stability.
it becomes a compensating factor,
Right,
just having some additional disposable income really makes your situation look a little better usually. So,
for sure.
I got a couple other questions for you here before we wrap up.
Yeah.
One is, what about people that think, well, I've already used my VA loan? It's a one shot thing. I've already used it. That was 15 years ago. Now I'm stuck in this position.
Yeah, this is another one that's mind-boggling. Like I hear this all the time, right? From young veterans to older veterans. They're like, "Well, I used it already, so I can't use it anymore," or "I already have a VA loan right now. I can't have another one." And they lead with that instead of asking, like, "Hey, can I have more than one VA loan?" They just lead with it as if it's fact. Okay, but yeah, the VA loan is a life benefit. You can use it at any time, right? There's no expiration date. Maybe you might have expiration date on your school benefits, like your GI Bill or something like that, but you definitely don't have that on the VA home loan. And on top of that, you can have unlimited VA home loans, technically, even if you've exhausted your entire entitlement. All that is required is to do a 25% down payment. Now, I'm going to give you an example. But what they did is they actually did like a cash out refinance on a property they were living in, so they were under the 75% loan to value 25% requirement, so they were just able to refinance their loans into VA loans. It was a power move, plus they had disability, so no VA funding fee. They had enough equity, so they got favorable terms, so that's pretty good. One thing we didn't mention, Jason, is that you don't have to if you have a VA loan and you move out of that property, okay? And this is important because like a lot of people are going to be wanting to do these earls in here in a little bit because the funds should drop, rates should drop even more. So if you bought a home with a VA loan and you move out of that home, it becomes an investment property, right? The VA loan is designed as a primary residence. That's the caveat. But if you leave that property, it's an investment property. With an EARL, you can actually, it's the only time that you can do a refinance on an investment property with a VA loan when you don't occupy the property is with an EARL. So
Wow.
that's kind of cool. A lot of people don't realize that you can do that.
That's amazing. And kind of on that same note, what about well, kind of in a weird way, it's still kind of tied to another little weird. Look, this is the world of nuance, right? Veterans
Right.
benefits in anything is just, there's so
the
many
details.
different levels. Yeah. Oh, it is totally.
Yeah.
So, what about people that think about the fact that I only have this loan for first time home buyer type of a situation. In other words, 100%. VA loans are 100% financing and that's it. First time home buyer type situation. It's not for me. And also, what happens in the event that something happens to me, the veteran? How is my surviving spouse going to deal with the mortgage situation?
So a lot of good questions here. Okay, so
I know.
I'll
Sorry.
talk off with the first one. Okay,
All
so
right.
it is actually a common thing where people say that, oh, well, I wouldn't say more from a veteran side, but from a like when someone looks at a veteran's offer, they'll look at it. And I have these. I just talked to someone today. They're like, and they accepted the offer, but they're like, well, we're looking at their offer. It's 100% financing. Looks like they have no money. Now I'm like, please, it's the benefit of the program itself, right? So it's, a couple caveats to it is that if you have the service connection of 10% or more, definitely the VA loan is a phenomenal product because you don't have to pay the funding fee. So if you're doing 100% financing, good. And for a lot of veterans, if they don't have to spend that extra money towards down payment, they could spend that money for improving the property, right? Because that's a big struggle for people. They'll come in, just buy it with just enough money for a down payment, and then they have to save up now to do the renovations or anything they want to do. So it is a huge advantage for veterans to be able to do that off the bat. That leads to having the right team in place. Because a lot of times people will be like, well, how do I make myself more competitive? Well, that's having the right team around you, right? The lender that's going to communicate with you, reach out to listing agents. When you're making offers, they're calling and letting them understand what the ability of the VA home loan is. And we did a video not too long about that condo deal, right? It has been a game changer. I have a whole video on the VA Condo as well, approval, but I was like, you know what? Let's do something because so many veterans are told that they can't do it, and it's a pretty easy process to do that, right? So that's just like one of those examples of like the power of knowing how the program works. You can kind of navigate that piece,
Right.
and then
Yeah,
surviving. Yeah.
yes, that's what I was going to ask you.
All right, surviving benefits. So one, before I go into that, is that, and I'm not an attorney, okay, but you can put a VA loan in a trust, okay? So you can't buy it in a trust. You have to buy it in your name, and then you can put the loan into a trust. A couple things that go with that. One, you're still able to get your VA disability benefits with it. So if you don't pay property taxes in the state that you live in, you can still be able to get that benefit. Two, it's really truly the only way you can technically pass on the loan to your kids, because you can't give it to your kids even if you've never used it, because some people are like, well, they never used it, why can't I use it? Well, that's not how the program works. And spouses are in a similar boat, because unless you receive indemnity compensation from the VA, you typically don't qualify to be able to get surviving spousal benefits, because normally the veteran has to pass away while on active duty or from a service-connected disability, okay? So to kind of keep that in mind. So if a spouse is not on the mortgage but on the title, technically lender can foreclose on the property. If it's in a trust, you protect it. And then you can, as long as you make the payments, you can go all the way down to paying it off and keeping the property. Unless you have the indemnity compensation and qualify for the VA loan, you won't be able to reuse the VA loan, but you at least can keep the loan that's on there. And if you have, yeah, so it's a cool benefit, and there's plenty of companies online that do them for like $600. It's worth every penny,
The
because
trust. Yeah.
because if you don't do the trust, then it goes to like a state, and you know how the government is. They're gonna want to take all your money, and then you have to hire attorneys versus having everything in place. Again, not an attorney, consult one. I'm going through it, so I'm only giving you my opinion of what is going on with it.
I love it. All right, David. Last question, then we're going to wrap up.
Yep.
it's kind of again, I love giving you two kind of questions at the same time to keep your brain going in different directions. So one of the things that I see people that basically self-deny or what have you with is kind of twofold. The VA loan process is too complicated and too expensive. What are your thoughts on that?
I think people make things complicated.
Yeah, I do too.
Yeah. So the VA loan itself, I mean, I guess you can relate it to anything that you do in life, right? I can't go in and be a carpenter this second because I'm like, that is too complicated, unless that's something you do all the time, right? So that's where I would say
Yeah.
our experience is different than a lot of other places. Is that one, we're more like a QRF, right? You call us, we can kind of get everything through how it needs to be. We know the process, even like the small things, like the VA looks at square footage of a property and it counts it against your residual income. You take the square footage times 14 cents. You could just ask a lender, like, hey, does the VA look at square footage? They'll be like, what are you talking about? Then you just
Right.
know, like, they just don't know what they're doing with this stuff. Because again, it's the devil's in the details on these types of programs for when it comes to structuring them. Now, as far as it being too expensive, Dave Ramsey came out and said the VA loans are horrible because they're too expensive and you shouldn't be using them. And in a way, I understand what he said, funny enough. And that's because if you look at the landscape that's out there and I look at a lot of loan estimates from competitors or fee itemizations, because people reach out to us from online, a lot of veterans get charged discount points and origination fees and higher interest rates when they really don't have to. I'll tell you something that's kind of if email or a ton of marketing or TV commercials for a lender, who's paying for that? You, the consumer, you is paying for all of that, right? So that's I think one of the big advantages with working with us. One, you have more of like a concierge service without paying that kind of price. And then we walk you through all that process. Plus, we're very competitive on our pricing to be able to take care of the veteran community. Because let's just face it, like when I'm looking at some of these estimates from people, and I'm like $6, $8, $10,000 in extra fees, like that's most people's savings are wiped out from this. And it's, I think, Jason, what we should probably do is do a video on how to actually read these documents, like
Mm,
how to read a loan estimate, so people just don't get taken advantage of. And then for the people that already bought homes, they can go back,
right.
hopefully not cry, and then just at
Yeah.
least know that in the future, like where they need to be.
You know what? I absolutely agree. I think going through your truth in lending, going through your like a
Just
good faith
lending.
estimate. Yeah.
That was a long time ago, Jason.
Yeah, yeah, I know. Well, so welcome to my world. Going through that data, right?
Yeah,
Going through the numbers, understanding I think that understanding what fees are controlled by the lender and what
right,
fees are really the third party fees, like your title company. So it's like those are it is what it is. What
right,
are these other ones and what do they function and why am I paying that? Right.
right.
So I think that would be a fun topic to go over, David. And with that, though, I think we're going to wrap up today. We really appreciate you being on here, and we'll drop your information in the comments and in the description of the video. Please check out David's YouTube channel. We really appreciate that. Again, I'm going to put the link in the description and in the comments. And David, here's my ask of you. Please watch this video when it's posted so you can keep an eye open for people that are asking questions in there too.
For sure.
So folks, don't be surprised when David actually jumps on there and starts answering some questions and giving you some information. So with that, thank you so much for watching. We really appreciate you. Have a great one. And remember, if we don't take care of each other, something went wrong.